with that, let's kind of start with the basics, knowing that our audience has a mix of everybody from residents to senior docs who just sold their practices. Liz, can you just give a little bit of a background on the difference between being an employee dentist who just gets W-2 wages, an independent contractor, which we'll dive more into that in detail in a few moments, who's going to be paid on 1099 income, and then a practice owner dentist who's most likely going to be receiving some combination of W-2 wages and, say, distributions?
Absolutely. So W-2 employee just means you're an employee for a practice. With every paycheck that you get paid, the taxes come directly out of your paycheck. So it's a pretty simple process. The big problem with being a W-2 employee is that the deductions and credits available to you are diminished, and in many cases just wiped out altogether. So you don't have the same ability to come up with tax saving strategies when you're a W-2 employee. One of the advantages of being a W-2 employee is that the employer does pay half of the Social Security tax and Medicare tax. So that's a break. And also, most often, employers have to provide you with some sort of tax benefits, tax-free benefits for being an employee. So in a nutshell, that's really what an employee is all about. When we're talking about an independent contractor that receives a 1099, every payment that's made to that dentist for the services rendered, no taxes withheld at the source. So you get the full amount of your paycheck up front, but this also opens up the door to extensive tax deductions and credits that may be available to you. Whether you're an independent contractor or if you're a dental practice owner, all the deductions and credits we talk about throughout these three podcasts are really going to be the same. But the big difference, again, is as an independent contractor, you generally don't have your own brick and mortar location. You're basically going out to various dental offices, freelancing, maybe servicing their clients as opposed to your own. Now, in terms of taxes, as an independent contractor, you're going to be required to pay quarterly estimated taxes. So maybe they might not be taking the taxes out of your paycheck, but you're still responsible to make the tax payments for that work on a quarterly basis. And now you're paying the Social Security and Medicare tax, both the employer's portion and the employee's portion. The other thing is, as an independent contractor, you generally are not going to get employee benefits that you may get if you worked as a W-2 employee. So clearly there's pros and cons to both, but most dentists, when they understand the difference between one and another, they're going to try to become independent contractors because that just opens up a whole world of tax deductions and credits to you. Unfortunately, it's not that simple. The decision is that up to you and the other dentists. We'll go through some of those criteria a little later in this podcast.
If I could, John, for 1 second, just ask a follow-up question on that. I think it's quite misunderstood on the side of whether it's the W-2 wage employee or the independent contractor, that 15.3% that's coming out, that, correct me if I'm wrong, an independent contractor would not only need to be paying that their income tax quarterly, but also their self-employment tax, if you want to call it that, but the Medicare and Social Security portion of that, they'd have to pay both of those quarterly, right?
Exactly. It's all the tax, both income tax, Social Security, Medicare tax. That's all paid quarterly through quarterly estimated tax payments, correct? And as you pointed out, as an independent contractor, you're paying not just your share, which is 7.65%, but you're paying another 7.65, which is the employer's portion up to a certain level of your overall income. So that, again, is a negative to being an independent contractor. But again, having the flexibility and freedom of being an independent contractor and opening up a world of tax deductible items to you, in most cases, more than offset the other.
Got it. So as long as they know that, because I think most employees, if you asked, whether it's in dental profession or not, do they know that they're paying 7.65% of every dollar, and then the employer is matching that? Most employers would probably have no idea that that's actually happening, that when you own the business. But like you said, while it might seem like at first a deterrent to be an independent contractor, again, we're going to go over the rules of when that can or can't apply. But just looking at it from sort of an objective stance to say, okay, I could be an independent contractor, but I really don't want to be one because I don't want to pay that extra 7.65%. What you're saying is the tax deductions that it opens up and the freedoms that it allows you to deduct to be better off from a taxation standpoint can significantly outweigh that extra 7.65%. And that amount only applies up to, correct me if I'm wrong, it's like $160,000 in 2023. So beyond that, that number is going to drop down anyway, right?
That's correct. And the other thing, and I'm glad you brought this up, if you're negotiating for a position and the position may be as an employee, throwing a number out there, you may be agreeable to pay, let's say, get paid $50 an hour. Let's just throw that out there as a number. If you're an independent contractor and the employer is offering that same $50 an hour, you're not getting a good deal there at all, because like you said, certain benefits you're losing. So the give and take there is, if you're going in as an independent contractor and you meet the requirements, you're not looking for $50 an hour, you should be looking for at least $55 an hour. So independent contractors should demand more money as an independent contractor versus an employee, and that'll help offset the cost of Social Security, Medicare, tax, other benefits that you would otherwise get that you may not be getting. And if you're able to do that and also get all the tax benefits as an independent contractor, you're in a much better situation.
Right, because if you don't, essentially the employer is getting to not pay that second half, paying you the same hourly, and then saving on their portion of the Social Security, Medicare tax.
The employer is basically getting away with paying about 10% less to you in the form of salary and or benefits. And again, I'm not even counting health insurance, but just basic things like food tax, unemployment insurance. There's all these other things an employer has to provide. As a rule of thumb, I always say you should ask for at least 10% more versus being an employee for the reason I just mentioned.